Good to see you again. All right, so let's start with Marriott. Morgan Stanley is bullish, noting business and some international travel demand still fully yet to recover, probably a lot of that in China. And while its debt levels are normal, Morgan Stanley hoping Marriott can finance more construction to grow RevPAR, revenue per available room. Are you a buyer of Marriott?
I am. Coming off the heels of Hilton, I see them reporting very strong earnings this afternoon, and they have three things going for them. Number one, they're more on the luxury end, and I feel like they have great brands that can continue to get premium booking rates. Number two, they have a lot of growth in Asia that can continue to drive above average RevPAR growth. And then number three, you are still seeing a lot of leisure travel. People are continuing to prioritize spending on experiences versus what they're spending on goods. And Marriott just announced this partnership with MGM, which will allow MGM booking on their sites and a little bit more revenue sharing there. And for me, that continues to bring in this whole experience in the hotel world. So I see their brands as just a great driver from revenue growth, and they're bringing more and more rooms on for availability. So for me, I think Marriott's going to knock it out of the park this afternoon.
Yeah, because Marriott, I think a lot of these companies are misunderstood. I mean, they don't own a lot of actual physical real estate, do they?
No, they use franchising, they use leasing, they use partnerships. You know, they've got their credit card revenues, branding, and they have wonderful loyalty. You have Marriott members that will drive like 30 minutes the other direction to make sure they stay at a Marriott hotel. That is the loyalty of their Marriott branding.
You've met our great and wonderful tech crew whenever we go on the road. You stay in here? No, I'm driving 45 miles that way to get my Bonvoy points. All right, stock two. Yes, I'm looking at you, Dave Grogan. Massive real estate developer Vornado, stock soaring, but Wells Fargo warning on commercial real estate in Manhattan, saying it's still risky. Piper Sandler flagging Vornado is facing $4 billion in maturing debt. Victoria, what do you make of these warnings?
Yeah, it's a sell for me, and they're so concentrated in New York. They're about 80% New York, and coming on the heels of New York Bancorp and the CRE issue, they're very much into office and retail, and they do have some good things going for them, and I do think there is some green shoots happening in New York City. I think the death of New York City is slightly over-exaggerated, but I just don't see funds from operations bottoming out. I see them continuing to decline on revenues, on net operating income, and I think they're just going to struggle to get their occupancy back up above 90%. So for me, I think it's a little bit too early there. I think there's still a few more shoes to drop. And while, again, I don't think that sector is going to completely die, I just don't see them getting the free cash flow from operations growth that we'd like to see. They have a little uncertainty on their dividend, and that's just something I don't like to see in a REIT.
Yeah, also a couple of big buildings in San Francisco, like 555 California, very well-known office building, and we know what's happening in San Francisco. Finally, let's talk trash. Waste management shares on a steady climb all winter, coming off another wild, by the way, golf tournament, the Waste Management Open in Phoenix. Waste volumes, a key metric, but Stifel also watching input costs, things like fuel, labor, whatever, new ways to capitalize on recycling. Stock has been red hot. Are you a buyer of WM?
I am. I think they've broken out and they can continue to grow their revenues, continuing to grow their operating margin. They've been great on controlling costs. I think they're going to get more from their recycling, and I think they're going to see unit volume growth in trash, which is not necessarily a great thing for the world, but a good thing for waste management. And for me, I think they just have a great management team that is continuing to say, how do we streamline? How do we make more money? How do we grow profitability and control costs? And they've been leading into technology. They were some of the first that introduced the single string recycling, which has boosted recycling, which they're able to resell. And they're seen as a leader in the trash space. So call me Tony Soprano, but you got to lean into waste management right here.